No. Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 91 for August 27th, 2019. Today, we will be discussing your trade ideas. And over the last few days, about 20 people submitted up to 5 symbols each. And I've put the list together of the top requests. And we're going to get through as many of those as we can and also get a trade idea from everyone. So we are recording this at 4 p.m. Eastern Time, and the recording will be up on YouTube and all of the podcast directories in a little while. So you can find the recording there. Yep. My name is David Kosmeter. I'm the creator of TimingResearch.com, and I have arranged for Matt Buckley, John Thomas, and Jim Kenney to join us for this episode. And Jim will be moderating, so I'm going to go ahead and turn it over to him.
Okay, great. Thank you, David. And we've got 2 great guests here today. There's no doubt about it. And I think in addition to that, we are at a point in the market where everybody has got to get on their toes, because I think in the next 6 weeks, if you're not on the toes, you're going to be caught flat-footed. We've got the S&P and the NASDAQ above its 200-day average, but you've got Russell Transport's New York Stock Exchange Index breaking their 200-day average. You got this VIX hanging right around 20. So obviously the question is, are we going to break up 25, 30, or are we going to break down? And you've got gold and silver in big bull markets, but we also have them way away from their 200-day averages. And we've got the high yield HYG hanging in there pretty well, which obviously adds maybe a little credence that we're just having a pullback, because if it was game, set, match, you would think the high yield people would be dumping. So there's a lot of stuff hitting the fan here in the next 6 weeks, and I'd be very interested to hear what these guys have to say. We're going to go over some symbols, and then we're going to go over some different individual ideas. But before we get to all that, who are these people, right? So first I'm going to introduce John Thomas of Mad Hedge Fund. And John, give us a little bit of a background on yourself and what you guys are up to.
Okay, John Thomas, the Mad Hedge Fund Trader. You can find me at moderator.com. Been in the market 50 years. We trade a global long-short macro strategy in stocks, bonds, commodities, foreign exchange, energy, and precious metals. And we have averaged a 34.6% return over the last 10 years. We are up about 35% so far this year. So we're having a great month, loving these tweets, loving this extreme volatility. It is a license to print money.
All right, we'll be interested to hear your take on some of these stocks here, John, plus some of your own ideas. This is next up is Matthew Buckley, Whiz Buckley of Top Gun Options, and he's very well known in the industry. Matt, a little background on yourself for the newcomer and what you guys are up to now.
You bet, Jim. Good working with you, and good seeing John again. Matthew Buckley, Whiz, been trading for about 27 years since I got commissioned as an ensign in the Navy. Remember, my God, buying my first mutual fund, I think it was through USAA in 1991 down at Naval Air Station Key West. Short story long, kind of just applied everything I was learning flying a fighter to trading, because trading is a form of combat, being disciplined, managing risk, contingency planning, having an SOP, a standard operating procedure. So when things are going super great or super bad, you know exactly what you should be doing and not letting emotions take hold. Popped up on the radar of one of the largest vol arb options trading firms in the world, headquartered right there in the Chicago Board of Trade. Founder and CEO of the Options News Network. Decided that Chicago winters are best left for people other than me as a beach and Navy guy, and moved down here to South Florida about 10 years ago and started Top Gun Options, and been having a blast. Like John said, this is a target-rich environment.
Target-rich environment. That's exactly what it is.
For options
trading. In the Marine Corps too.
Yeah, exactly. This is like shooting fish in a barrel with the volatility, and living tweet by tweet and selling the rips and buying the dips for August has been fantastic. Yeah. So looking forward to working with you guys.
It's been a free money machine.
Yep.
And one of the big points you made, obviously, is whenever you're managing risk in a portfolio, managing your bankroll is very, very key, meaning exposing your account to only so much risk on any one idea. And I think that's something that you very much tout as a good idea, Whiz, right?
Yeah, absolutely, man. I mean, before you ever squeeze the trigger on a real trade, man, you got to know exactly what your maximum risk is before any aviator goes flying. They don't talk about what a great hop is going to be. They ask, how are we going to get killed? How are we going to die? And if that doesn't happen, we're pleasantly surprised. So yeah, in this type of market, you have to mitigate risk. You know, you got to let your winners run and cut your losers short. And most people are inverted. Don't do that.
Protect your ammo at the end of the day, right?
Correct.
All right, so here we go. Let's jump in here. Boeing, the stock obviously was up at 446, went in the dumper because of all the problems with their planes, and now everyone's coming back in because they think the news is getting better. So let's start out with John and get a little bit of an idea of Boeing at 354, up, down, or sideways. What are you seeing?
Well, I'm constantly asked what's the best leap in the market. That's a 1 or 2 year options trade. And if you hold a gun to my head, I would say Boeing right now is the #1 pick in the market. You know, dropped 150 points from its high on the 737 MAX problem. It's probably going to be coming back into full production in months once they sort all this stuff out. It's basically a pilot training problem, which is an easy fix. So I am bullish on Boeing, and I've been telling people to buy dips for months. And it's worked. It's been sort of flatlining right along the support level, just over 330, and it's been a great moneymaker for us.
Yeah, that 300, 330 area is obviously very critical. To get a little bit more specific, you have any ballpark figure on a strike price and an expiration and a premium on one of the leaps that you might be looking at a little bit?
Well, I tend to be very conservative on my leaps, so I would do something like a June 2021, let's call it a 380, 420 call spread.
You do a spread, okay.
And in 2 years, you might get a 500% return on that.
Yeah, I mean, if they go back to 420 or better, you got a good deal there. And by selling
400 or better, and if it goes up any time before then, you get money, it's just less.
Yeah, no doubt about it. No doubt about it. But the fruition of the whole thing, the maximum would be that 40 points. What kind of dough are they asking for that spread?
I haven't priced it today, but generally if you go
ballpark
30% out of the money on 2 years, you'll get a 500% return. So buy them for $1, sell them for $5 sort of thing.
Yeah. Yeah, and like I say, if they start getting all those planes going again, I guess they got freaking hangars and hangars of them with people, that they're going to deliver with.
Oh, they're making 57 a month, and they're just parking them.
Right. And it's a
I learned something the other day. 1% of the American workforce works for Boeing or its suppliers, and it is absolutely one of the best-run companies in the world.
Yep.
And I think probably one of the reasons you're more concerned about making sure you have some time involved is because I believe their moving averages are probably inverted to the downside, which is not the greatest situation. Anyway, let's turn over to
because I have airtime on a B-52 bomber either.
I got you. Well, let's turn this over to Matt, who should have some good information. He's a pilot, and what are you seeing here on Boeing here at 354?
Yeah, I flew a Boeing product for 15 years. It was initially McDonnell Douglas that built the Hornet. John nailed the problems here and as an aviator, you're brutally honest, respectful truth over artificial harmony. 4 people deserve to die in those crashes. And those were the pilots. Who was it? The Lion Air guy, the autopilot, when he clicked it on, the thing goes, full nose up, they go full nose down, turn the autopilot off and go, man, that was weird. Put the autopilot back on again. The thing pitches up, goes down. They did it 6 times. And then the last time they crashed into the ground, supersonic. The plane's not even, so they disintegrated. The largest piece that they found was the size of a forearm. So when when autopilot don't do what you like to do, you turn it off and you fly the airplane. So it's aviation is a self-cleaning oven. The main reason this hasn't imploded is because it's a software fix. Now, Boeing, it's not good when you get alphabet soup involved in your company. When DOJ, FTC, civil, DOJ, dudes with bracelets, Department of Justice investigating the FAA, Boeing, who kind of had a cozy relationship to get things kind of approved quick. That's troubling, but at the end of the day, what are we going to do, folks? But, Trump loves Boeing. It's like John said, 1% of the workforce, whatever it is. This is America. This ain't Airbus. This is, what is it? If it ain't Boeing, I ain't going.
Right.
And this is also a defense play. Donald Trump, for all his, America first, keep the troops at home, ain't, afraid of lobbing missiles or throwing airplanes and bodies at stuff. So I agree with John. I'm bullish on Boeing, but out to the future. I'd do the same thing. I'd go hop in my F-18. I'd go out and look at some leaps here. I know John goes out of the money. Those are good, cheap options. Sometimes I like going a little deeper in the money, maybe buy some calls with, a 0.8 delta. So it's got a little meat on the bones. Those are obviously a little more expensive.
Well, if you want a really free money trade, buy my 38400 2-year leap, and then every month buy the 280 300 call spreads against that.
Sure.
And you'll have an absolute money machine with a downside risk of 280 in Boeing.
Yeah.
And that'll knock out about 10 or 15% a month in profits, in addition to what you're making on the leaps.
Exactly. It's a great idea to lower the cost basis. Net, bullish on Boeing, short-term neutral to slightly bearish, but that's just because we live in a Trump Twitter world. But,
Right.
We should be, quote unquote, 2 years out into the future with a little of this in the rearview mirror and Boeing back.
Yeah, higher.
Yeah, agreed.
By the way, it sounds like, Matt, you've been reading my research. If you know where the circuit breaker is on a 737, this is a 5-second fix.
Exactly.
If you don't know where it is, it takes 15 minutes to read the manual to find out where the autopilot circuit breaker is, and you crash and die.
Yeah. Yep. Couldn't agree more. It's sad.
All right, well, let's jump over to the next stock, which is the big guy, Google. And a lot of people are saying very positive things on the future of Google. They're supposed to have another $5 billion revenue increase from something I heard today on the news. But right now we're at 1167 on it. And obviously we've been higher, and that 1150 area has been kind of a support area. But John, how do you see Google at this point?
We have been running rolling longs in Google for about forever. Their headquarters are about a 20-minute drive from where I live. And again, the way we've been doing this one is buying deep in the money call spreads, always just under the market. And even though Google's only about up 10% in the last 3 months, we made money in June, July, and August, 15% a shot, doing exactly that strategy. And I think you keep doing it. Google is currently building office space and housing for 25,000 new hires over the next 5 years. So in San Jose, it's creating a big political problem here. So anybody who's investing that much money in their own company, I'm going to ride their coattails all day long. So bullish on Google and Alphabet.
Yeah, it's interesting to hear about that hire, because Goldman Sachs just had the biggest employment fair that they've had ever or something, but they're only hiring engineers.
But nobody, and I thought you were going to say nobody showed up.
No, they're hiring all engineers, which means the whole business is going into people who know software. They could care less if you know what IBM means.
Yeah,
all right, so anyway,
salesman.
Alphabet is obviously where we are right now. And one last thing, John, before we split, with regards to strike prices, you were saying in the money. So right now, if we're at 1165, an example of that strategy would be what? Buying the 1150 and then selling something higher? Or?
Well, we actually just took profits on the 1030, 1080 this morning. Which
now I got it. It's a deep in the money situation, yeah.
Yeah, which we put on at the very beginning of August. So it was in the money at that time, and you literally could do the same exact strike today, 1030, 1080. That allows you huge support from the 200-day moving average just above. So, we probably won't break the 200-day. If we do, you'll have plenty of warning and time to get out of there with a small profit and avoid any losses. And that's where risk control really comes in this kind of market. You don't hang on to losers for a second.
Right.
Because, the next day they could be down 5 or 10%.
Yeah,
look at Apple was down 5%, 10% in one day last week.
Right. The May-June environment would have been terrible for that idea, but the environment from June to current and December to May would have been obviously good environments for that.
Well, May, June, we were 100% cash, and we were waiting for the market to peak.
And thank God for that. And thank God for that, right?
Yeah.
Exactly.
All right, Whiz, let's keep
drinking schnapps in Switzerland when the market was falling apart.
All right, what are you seeing here on Alphabet, Whiz?
First of all, it's against my religion to call it Alphabet. I call it Google.
I know, me too.
I lost
I'm trying
money
to be politically
today.
correct,
Well, I lost money the day, breaking news, Google changes his name to Alphabet. And I was in a bearish trade. And of course, Google's up, or of course they said Google 5% after hours. I'm like, son of a. So it's like if FedEx came out and changed its name today, like we'd stop calling it FedEx. It was
Exactly.
stupid. Anyway, I'm not a Google guy. I'm an Amazon guy. One of the reasons I'm not a Google guy, as you guys both know, I kind of trade my politics. We're one shoe away from literally DOJ type of here they come with both feet. We saw that. What was that? A couple months ago when breaking news. Here comes Uncle Sammy, and like I said, the alphabet soup. DOJ was looking at Twitter, Facebook, and FTC was looking at Amazon. You guys both know that FTC poking around means 5, 10, 15 years later, like Standard Oil or like IBM, or 15 years later they come out with an opinion.
Right.
DOJ is a little bit more serious. So I think with the election coming up, there's going to be a lot more attention to these companies.
Heat on them, yeah.
Yeah, this last week it was a Hillary Clinton supporter who dumped all these internal documents from Google that said they personally believe that they changed 2.6 to 16 million votes in the last election. So, when you got half the country, half the politicians really, well, I'm not even going to say that. Warren and a lot of the Democrat candidates are like, hey, we got to rein in these things. So if you look at the chart I got up, the 1 year chart, it's a trading stock. It's dead money. I mean, look at that chart, man, compared to Amazon, and who I'd rather go with. So I'm not a big goo guy, especially when Chairman of the Joint Chiefs of Staff, Joseph Dunford, 8 months ago, testified. The dude doesn't have to testify under oath. He's a Marine, but he's testified under oath. He's like, Google is working for the Chinese, the PLA, the People's Liberation Army. And I'm like, wow. So I'm not a goo guy. I wouldn't be long-term bullish on it. If they broke this thing up, I think the parts would be more than kind of like a GE. It would be better broken up.
Right.
But I'm just not a goo guy. If I were to go into the FANG, it would be in Amazon.
So,
Matt, and your opinion also is probably pretty similar to Facebook as far as the political risk is too high to start fooling around with it.
It is. If you're going to go in that group, Jeff Bezos has done a phenomenal job of flying under the radar. He's not the soy boy Twitter CEO who's the CEO of two companies. He's not the goo guy. The guy sat on stage with a 4-star Air Force general and said, we're an American company. And they're trying to get the Jedi contract, which Uncle Trump might squash. But I don't like politically active CEOs or companies.
Right.
Jeff Bezos has done a good job. The last time he said something negative about Trump was before the election. He said, I'd love to put the dude on a rocket and blast him into space. And then the night that Trump won, there was his final comment about the dude was, congrats, Mr. President, unite America. The guy stays away from the politics. I mean, we can talk Washington Post all day, but with an election coming up, I think there's too much just headline risk, and it ain't positive for Google.
So, Matt, if you broke up Google, what would that do to the value of the parts?
Oh, no, that's what I mean. I think the parts would be more if you broke it up. And as you know, they're building all the crap around there. So I think broken up, it's like a GE, aircraft engines, imaging, medical. I think it would be worth more apart than it is right now. If it broke.
And by the way, the same is true for Amazon and Apple.
Agreed. Yeah.
So that's why the whole antitrust issue is a actually a value creator, not a value subtractor. And you should be scared out of these stocks for that reason.
I don't disagree with that. I'm scared of the headline risk. You know, if you're talking longer out, if you know you wake up one day and here's Attorney General Barr with with braces, he ain't gonna arrest anybody. But I'm a headline risk guy in this stock, and it's safer with Amazon in my opinion.
So if the Chinese army drinks Coca-Cola, does that mean Coke is also working for the Chinese army? Don't forget, Google closed all their offices in China just to keep their software from getting stolen.
Well,
they don't want to have anything to do with China.
We could talk on a secure line, but Google is absolutely working for the PLA. General Dumford testified to it. He's one of your Marine buddies. So any company in this climate that the chairman of the Joint Chiefs said is an arm of the People's Liberation Army, I don't want to invest in personally.
All right, it's at halftime almost here. You guys have any ideas you want to share as far as trading ideas or sectors or anything you've seen that you think you want to share?
John, you can go first if you want.
Yeah, John.
You know, it's a close your eyes and trade market. Any big move up, you go short. Any move down, you buy, cover your shorts, and that's going to continue as long as we have daily tweet storms. And I'll tell you another thing, an awful lot of unprecedented things are happening in the market and people really don't know how to respond. For example, US interest rates going to zero. Even if you told me what the Fed decision was for September 20th, whether they're going to raise, lower, or do nothing, I don't know how to tell you whether that would create an up 2,000 or down 2,000 point move in the market. It could go anywhere. So stay very short term, very active on stop losses, and go for the short term profits. That's the only way you can trade this kind of market.
Okay, Matt, do you have anything that's less generic and more specific on a particular market? Or
well, absolutely, and it's China. This is going to get worse, and it has gotten worse before it's going to get better. There is absolutely an 18-wheeler of daylight between China and the United States. I mean, when you got the president saying, hey, we talked to them last night, they want to make a deal, and the Chinese, who do you believe, first of all? But the Chinese saying, what are you, high? Nobody called any of you.
I believe the Chinese. You make more money believing the Chinese.
You got Secretary Mnuchin sitting there looking like he wants to melt into his chair because he's like, well, and Trump just, whatever, there were calls. What am I getting at is we've been trading the hell out of the FXI, which is the iShares China large cap ETF. We put on a bearish, I called a burner trade, like an afterburner trade. So we sold a bear call spread up here, brought in, I don't know, like $2,500 and took that $2,500 and bought downside puts. And with the two trades, it made $20,000 in about 7 trading days. We did, and I'm getting ready to do another one here. So the FXI, and you might be sitting here going, well, why is this thing kind of hovering here? You want to know? It's the invisible hand of God, and God is the PBOC, the People's Bank of China. So if you look at the FXI, it's a massively, or before, it used to trade all over the place. Then we had this period of calm. I have a buddy who runs the Asia desk for Macquarie in hopefully Australia. He's in Hong Kong. So he said, dude, the reason, I'm like, where did the FXI vol go? He's like, the Chinese are pumping money into the market, but they're not, obviously, in the old days, they used to say, hey, we're doing stuff. Now, obviously, the PBOC, if they're dumping money in to prop the market up, they ain't going to announce it because Trump's going to do, victory lap. So I'm hearing on good authority that it would probably be a good time maybe sell a at-the-money bear call spread. I'm like John said, I'm going tactical, man. I've done this for a while, like no kidding, trading. This is a workout. This is a day-to-day type of market. But I would look at selling a bear call spread right at the money here out to like maybe next Friday, the 39.5, 40 bear call spread, bring in a nice credit and buy some downside puts because this thing's going lower. The only risk to that trade is what? Breaking news. Trump says we got a huge deal coming. He's been saying that every other week, trying to prop the market up. So I don't think there's too many risks to getting bearish on FXI right now. And we have 2 of those trades on as I'm speaking. One of them is a weekly options trade that's up about $400 in a day out to Friday. So if you look at this one's still good right now, risking about $5,900 to make $1,700 out to Friday to 39.5 40. So that's what I'd be doing, man. Bearish on FXI.
Gotcha.
Well, since I believe in buying American, I will mirror that with my IWM trade. That's the Russell 2000. In falling markets, small caps fall about 1.5 times faster than large cap stocks. So we've had 3 spikes up in the IWM in the last 4 months. We've sold every one of those. We put on double shorts, and we've been absolutely raking the money in. We just covered one of our most recent shorts this morning during the meltdown. So any kind of substantial rally, look to sell short the Russell 2000, the IWM, and then just wait for another disappointment on the trade front. And you should be able to make $10,000 or $20,000 on that real quick.
Yeah, it brings up John's, little dead cat bounce here, and it really does look like it's just sitting here on a ledge waiting to go. Yep.
Ready to go to absolutely to pieces, yeah.
Do you guys have any kind of an overview on what the next 6 weeks look like? Some people think we might hang around here for a little bit and then go into the tank pretty hard, and then around mid-October, November, maybe start making ground on the upside. You guys have any view on what the next 6 weeks or so might look like?
It's funny because obviously no broker lets you trade off the left side of a chart. We all got to figure out, what the right side of the chart looks like. So to John's point that he said earlier, this is what we're doing right now. This is a trading market. We're going to be up, down, trading like this. I call we're in World War I right now. This is trench warfare. Here's the Allies and here's the Germans. The market does not like hanging out between moving averages. I mean, humans don't like it, and until the algos become self-aware and kill us all, they don't like them either. So these usually act as magnets. I'd cut and paste this forward, man. I mean, last time we did this, we imploded through the 50 on the S&P, little relief rally, and then slammed through the 200. And then we had Jerome Powell put a Band-Aid on our boo-boo and kiss us on our forehead and said everything's going to be great. Right. So we're kind of in a binary market here, in my opinion. We're either going to get back up to the 50 or we're heading lower. And the president's ability to tweet or out to Marine One talk up this market, it's done. The Trump put has expired, and John alluded to the Fed meeting coming up on the 20th. I don't know. We nailed this back here. I said, we're going to sell on the news. I mean, the guy testified in front of the House and Senate and said what he's going to do in a couple weeks, and he did it. And what happened? We imploded. So I don't know, man. Uncle Jerome and Mr. President, I don't know. The days of the Fed and the president being able to talk this market higher are few and far between. So very long answer to your short question. I think we just got more of this until we get some clarity on what the hell's going on. And I don't see that anytime soon.
Yeah, John, you locked into a very good idea with the Russell, because that was one of the reasons I thought that was a baloney rally above 3,000, because the Russell and the transport.
The Russell wouldn't move at all.
It wouldn't move at all. And that 160 area on your IWM, they try to break that 3-4 times. So that's a real good wall of concrete up there. And then, selling every rally has definitely been the good call on your part.
Well, and we've been doing put spreads like 160, 163, 158, 161, 155, 157. We're now at the 153, 156. We've been rolling these things, down on every single rally, going short dated, getting the maximum time decay, and it's just been a real money printing press. As far as the SPYs, our target all along for this down move was the 200-day moving average. That's at 2,800. It's about a little more than 200 points down from the July peak. You break that, this all of a sudden goes from a 2,000-point Dow correction to a 4,000-point Dow correction. In other words, a December repeat. And that should happen right around the time of the Fed interest rate decision.
Correct.
And now the futures are saying, 98% probability of a Fed rate cut. If they don't cut rates, we will get a 2,000-point drop very quick. And you know what? If they do cut rates, we may also get a 2,000-point rate drop.
Guys,
fewer interest rate cuts left to do.
And he's running out of ammo, man. He's getting close to being Winchester. So Friday morning, I was up in Vermont dropping my oldest off at college, trying to watch the coverage before Powell spoke. Who was it? Esther George, the Philly dude, and they literally had three Fed lieutenants say what? We didn't need to cut. And Jerome Powell, I call him Jerome Comey, because during his press conference, it was the 19-minute Comey press conference of Hillary's a criminal, followed by 2 minutes of I'm not doing anything. Jerome Powell gave a press conference full of everything's great in the economy and I'm cutting rates. And even the one CNBC reporter was like, dude, what, why? And he kind of scrambled. So I know what the futures are saying. And John's right. If we get I'm telling you, man, listen to a lot of the lieutenant's words, not just the skipper here, because the skipper was like, oh, we might have more cuts. But and both you guys I know saw this today, man. Bill Dudley, man.
Right.
He totally claimed him.
God, it was the Colombian necktie today, more or less saying, don't do anything Trump's asking you to do, or even what you think you should do. Just kind of screw everybody, a la Bill Maher. Send us into a recession so the dude doesn't get reelected. So this is, I don't know, man. I think no matter what the Fed does in September, I'm going to sell on the news, man.
Because he's destroying the economy. That's why he said you shouldn't enable Trump, and he is.
Well, if you listen to Jerome Powell.
Self-inflicted wound in history.
Well, the Jerome Powell and the macroeconomic data don't support that we can talk ourselves into a recession. Housing was a little soft and core durable goods disappointed the most in 3 years. But net, and we'll get a jobs number next week. I mean, this economy ain't – so. And John, you'll appreciate this analogy. When you're fired off a catapult on an aircraft carrier, you go from 0 to 150 in 2 seconds. At the end of that catapult stroke, you actually decelerate. So you're in this you're in the Millennium Falcon, like going light speed, and then all of a sudden you hit the end of it and you slow down a little bit and then you start climbing out. That's what the economy's doing. We've been doing full afterburner and now that we start to slow down a little bit, everybody's going, holy crap, we're all going to die. I just don't see it. Based on his speech on Friday, he said the same thing. Things look actually pretty strong, but I'm freaked out over trade. So one could make the argument that in September, if we're still kind of in this Luftberry, this circular firing squad in trade, why does he need to cut? I personally believe we need to be raising interest rates. I think or doing nothing. I do not think the guy needs to be cutting, and that's my 2 cents. I just think he blew it a while ago. We should have been raising rates, not cutting, in my opinion.
Well, I'll tell you what the market's setting up for, and that's sideways move until September 20th between the 200-day and the 50-day. And then the Fed decision comes out, and it makes no difference what the decision is. The mere fact that it's out of the way generates another 2,000-point drop in the Dow, and people will just go, holy smokes, and jump at the market like there's no tomorrow.
Yeah,
I buy into that. I buy into that scenario at this point in time.
Correct. I agree, guys. I think it's a sell on the news here. And John,
let the moderator throw one out here, okay? I'm looking at a stock called Royal Dutch, and it's RDS.A. Can we put that one up?
Yeah, sell.
It is right there at the 55 mark, and I haven't pulled the trigger on it because, obviously it's meandering here, and it could break this 55 mark. But I saw that the former highs from years ago was about 55, and I saw that we came down to 55, and this is a neighborhood that it may stop at, but it'll only stop there if this crude is really hitting lows at 53 and 55 and not going to bust through. But the darn thing pays a heck of a dividend, so you can sit there and watch the movie and collect, 3 times anyway, money market, and you might make a buck on it if it wants to go up to 65 or fill that gap. Mm-hmm. The question is am I looking at something that's on the precipice of going in the toilet, or is this really a decent buy? What do you guys think?
Yeah, I vote for toilet. The fundamentals in the oil industry are the worst they've been since the 2008 crash.
Yeah.
And high dividend stocks pay high dividends until they don't. I mean, if you really want a high dividend, go for a retailer where you can get a 10% dividend.
Yeah.
But they're on their way to bankruptcy. So Our target on a downside for oil is $42. After that, maybe 25.
Oof.
Then you wouldn't want any part of these
You
things
don't
now.
want any part of the
Any part of
energy
these things.
industry
Yeah.
whatsoever. Short term, they get screwed by overproduction in the U.S. and in Saudi Arabia, collapsing demand because of the China trade war. And what's the long-term view? They get replaced by alternatives.
Well, exactly.
And then it goes to $10 a barrel. So
It has no upside momentum. It's like catching a falling knife. It's just,
really is.
it's seductive because of the fact that it's, down near this area that has been some kind of a congestion area. And, I like to get cash flow on my money, and that looks like pretty darn good.
I'll agree with all you guys. I'm going to punt a little bit because I've been completely wrong about energy. I mean, 20 years ago, you get we didn't have drones, but you get a drone shot down, you get a tanker seized, you get, the VIX is up at 50 and the Dow's down 1,000 points. We're shrugging currently at what's going on in the Middle East, mainly because we've done a great job of weaning ourselves off of the Middle East teat of oil.
We have.
And we got our own renewable and natural gas and this and that. So I've been wrong. I thought, I'm thinking Whiz 20 years ago on the Abraham Lincoln that, oh my God, we're going to war in the Middle East and nobody cares about it.
Nobody cares.
Well, I was over the Persian Gulf a month ago, and the tanker war is going on right beneath me, and the price of oil goes down. I mean, if you can't get oil up on a tanker war,
let me know next time you do that.
Refining facilities,
you
will never get it up.
No, let me know next time you're doing that, and I'll short it.
How about on the drug side? Any interest in things like Pfizer that have gone in the toilet and pay a big dividend?
What's that?
PFE?
The problem with Pfizer is this is going to be whipping boy number one in the election next year.
Right.
The question is, do we cut drug prices by 50% or do we give them away for free completely? And drug companies generally do not do well going into elections. They do fantastically coming out of elections. So I'm waiting for that better play. Long term, the business fundamentals of all these big drug companies are fantastic because the rate of curing new diseases is roughly 10 times what it used to be.
All right, one last one real quick. What about telephone?
What's that?
That should be a T.
Yeah, that's another going out of business sale.
Well, I mean, the chart is not terrible, and that's 6% almost.
Yeah, the chart won't give you a bid, though, when the stock starts to fall. Telephone is basically a company of rusting copper wire.
Yeah, they got direct TV.
And you're competing against, fiber optic cable.
Yeah, you might be right.
Look, it's a 100-year-old business model.
Yeah.
Yeah, I think this is Horse and Buggy Whip Incorporated. I don't disagree. I'd be going with the new telephone type of companies. Yep.
This was one of our favorite shorts until the dividend buying panic started, around March, and then people would pay anything for yield, and this thing was yielding 4 or 5% at the time. So
yeah, that's nice.
It's a no touch for me.
All right, let's go back over to the list here and throw up Apple because a lot of people obviously are interested in the number one company out there, and arguably. But let's see what Apple looks like to you guys, and we'll start out with John and give us a little lowdown on Apple.
Well, long term, it's going to 300, if not 400, just from the share buybacks alone, where they have about 150 billion committed to buy shares. Short term, the low-hanging fruit for the Chinese in the trade war is just to have the workers not show up at the Apple factory in China one day.
Bullseye.
And that would just you'd get like a 20% down day in Apple. That day I'll buy, but it's a big risk in the stock right now. And Apple directly or indirectly employs 1 million people in China. I've been to that factory. It's the size of a city.
Yeah. On my soapbox briefly, I can't stand a company who, when their country says, hey man, there's people getting mowed down by a terrorist right now. Can you unlock this dude's phone so we can maybe save lives or see if there's other terrorists? And that company goes, no. and you have to get an Israeli firm to hack into the iPhone to open it. I don't dig those type of companies or limousine liberal CEOs, especially when they are working with China, putting stuff on the iPhones so they can get spied on and kissing, Xi Jinping's ass, or using 9-year-old boys and girls to build their phones. Can't stand Apple as a half a company, as a money machine, great. But John nailed it, folks. Somewhere, my notes, 3-4 months ago when this thing was, I thought it was hot and heavy then. It's hotter and heavier now, this trade war. Apple was literally named by the foreign ministry as whatever the hell the name was, bad guy number one list, let's say, as you would be the first to get clipped. And there was a report in the journal that said people were embarrassed in China to pull out their iPhones. It's anti-American. It's anti-Chinese. So if this thing, this was the same weekend, they were playing like propaganda war films of them destroying the United States. So there is way too much risk short term in Apple. I have no idea if Xi Jinping wakes up one day and says, get out. Or literally, nobody shows up or we're going to have you shot. That's bad. So short term, I wouldn't even touch Apple. Long term, I wouldn't touch Apple. I'd be in Amazon.
Yeah.
So.
Well, I'll tell you, the fact that it could not go up and make a new high was another tell that was a selling rally above 3,000. Because Apple, if it's not going to participate in it, it's like the number 1 or number 3 stock in every one of those ETFs. So, hey, let's go. We got a horse here that has got to be talked about. This is the Secretariat of Whiz Buckley. We're going to turn our attention to Amazon.
Oh, finally. My God.
We're not going to leave without that one, man.
Of course. Obviously, long-term bullish. I mean, the guy is in everything. I mean, this is the dude from space. What the hell is it? You probably know it, John. Whatever his space project is, Kuiper or whatever.
No, I can't. There's so many space companies now, I can't remember them all.
Well, no, it's not his company.
Blue Origin, that's it.
Blue Origin's his company, but no, he's got an initiative that Morgan Stanley put out a note on that says it's a minimum of a $250 billion a year business. He wants to put something oddly specific, 3,257 satellites in low orbit for high-speed internet for everybody literally around the world, like sub-Sahara to,
Yeah, Facebook's doing the same thing, by the way.
Yeah, we're going to run out of space. We won't be able to see the sky. Amazon's getting into healthcare. They're in food. I predicted 4 years ago when one of my FedEx captain buddies sent me a text that, hey, man, that a buddy of mine who leases planes just said Amazon leased, 5 jets. I'm like, here comes Amazon Air. The post office booted them. Jeff Bezos is I'm going to keep quiet, and I'm going to build my own. He's got Amazon Air. I think they're supposed to have 70 airplanes by 2021, and they're building their hub, shockingly enough, near Memphis and Louisville, which is UPS and FedEx headquarters. The man is just absolutely phenomenal. The one potential short-term downside, like I alluded to earlier, is the JEDI contract. The president getting involved in business, shocker, saying, we might have to look into that because get this. So Secretary Mattis, probably one of the best Secretary of Defense we've ever had, has dinner with like a Amazon exec to talk about it. And Trump says that's a bunch of impropriety. We got to look into it. The dude had dinner with Tim Cook and says, oh, geez, well, Apple might have some problems, so I'm going to punt on the tariffs until December. What the hell's the difference? So if we're going by headlines, the DOD might lean towards Microsoft. What's the other one? Begins with an O. They're not even close to. They're not going to win it. It's either Microsoft or Amazon. If he doesn't get the JEDI, I don't think it's a mass. It might
Oracle,
be short.
you mean?
Oracle, yeah. They sued in federal court, and the judge said, get out of the way. It's down to Microsoft and Amazon. So short term, chart doesn't look good. It's kind of on that ledge, but almost everything else we're talking about is. Long term, I think it's a steal. In a year from now, it's a $3,000 stock. The guy is going Warren Buffett on it. He never wants to split it. So who knows? By the time my kids are trading, this thing's a $10,000 stock. So uber bullish on it long term, short term neutral to bearish.
All right, John, do you have something on that?
Yeah, hugely bullish on Amazon. I used to work with Jeff Bezos at Morgan Stanley about 30 years ago. Our view on the stock is that it doubles to 3,000 and then they break the company up and add another $1 trillion in value to the pieces. So that would mean 400% to 500% gain on anybody who comes in here. And by the way, this is another great long-term leap candidate. You do something like a 1900, 2000 leap 2 years out, and that's another 500-600% gainer.
Okay. Yeah.
Yep.
With regards to, because we're coming up to the top of the hour, let's talk about it. Do you guys have anything in the gold or silver sector that you're kind of looking at? Because, obviously it's had a pretty good year, and there is a lot of drum pounding that it's a bull market, and some of the stocks obviously have done pretty good. Is there anything you guys have looked at there very much?
We've been bullish on gold all year.
Any specific? Are you using an index like GDX or GDX?
We do everything. We've been doing the GLD, the GDX, which is the gold miners, has double the beta of GLD or triple, and then buying the individual miners, Newmont and Barrick Gold, which just changed its ticker symbol to GOLD, and the miners have been going up around 3 times the rate of gold, and we see this continuing until you get a new all-time high in gold, which is 1927 and out. So buy gold, buy silver, which should rise at twice the rate of gold from here on. It finally got into the game about a month ago.
You do anything with the juniors, GDXJ at all, or are you sticking with the
don't
GDX?
Because you always run a bankruptcy risk or a bad earnings risk on these juniors, and you just don't have that much liquidity if you're a big institution.
Right. Whiz, are you looking at anything in the gold stock area, or?
I don't, man. To be honest with you, I stopped trading the GLD. When was it? A couple years ago. First of all, when a stock, ETF, or index isn't doing what you think it should be doing, you're wrong, not it. Right. So a couple years ago, you guys probably remember this. What's his name? Not Hank Paulson. He was the Treasury Secretary. The other Paulson, the guy from that predicted the housing crisis.
John Paulson.
Yeah. So he was
put 50% of his fund into gold.
Exactly. And guess what happened? A bunch of folks who didn't like him with other funds pounded him into the dirt and essentially put him out of business. And so I was bullish on gold around that time. And it's a good hedge against inflation. We don't have any. It's a great hedge against the world's going to pieces, which we are. So of course, when you look at a chart like this, we're looking in the stratosphere. Whiz will get in right here, and then tomorrow to be back down here. Mm-hmm. I'm doing a better job of instead of tracking this stuff, I'm trading the hell out of the VIX and VXX and those products, just because in this type of market, man, it is free money. Every other day, it's doing the exact opposite. So I'm staying away from the metals just because it feels like an emotional trade. But my God, man, if you're in it, stay in it, and good on you.
Yeah, it's obviously extended off the moving averages, so that makes it a little bit worrisome to get in. But, their budget deficits are going to go through the roof. They want the dollar down, and they want interest rates way down. And, printing money and low interest and a weak dollar, that's pretty the trifecta for gold at some point.
For the first time in history, gold has a positive yield compared to euros and yen.
That's true. Yep, that's a good point.
And the other big driver on gold this year is when the trade war ramped up, the Chinese yuan started to collapse, and that led to panic buying of gold by Chinese fleeing their own weak currency. So that's going to continue also for at least 18 more months.
I mean, I'm bullish on gold, guys, but I got it in my house and it's protected by a well-regulated militia.
What'd you say your address was, Matt? You still living in Boca?
There's claymores on the front, John. So you can stop by and come and get it.
Hey, how about you throwing up the VIX chart and giving us a little bit of a quick bite out of your view on the VIX, since it seems like it's up your alley.
Well, this was awesome. This day right here, ladies and gentlemen, was at like the 25th of July. The Wall Street Journal had an article that said, the markets are eerily quiet right now. And 3/4 of the article talked about how people were shorting volatility again, that it was the cool trade. Everybody remember the last time people did that? Right here. And then everybody remember Volmageddon? People running around shorting volatility, in their little Superman caves picking up dimes until their cape got caught, and people got wiped out, funds got wiped out. I tell the folks at Top Gun Options, whenever you see an article in the journal that says, here comes the retail trader, like people are bullish, get out. And whenever you see an article that says, hey, people are shorting volatility again, get long. So obviously volatility spikes for a reason, but this was, the whole Mnuchin and Lighthizer overseas calling the president on a break saying, hey man, they're MFing you. Oh really? Get on the plane and come home. Boom. And then, so not only did we get a spike in volatility, it's staying elevated. I tell people that don't call it the volatility index, you call it the UX, the uncertainty index. So not only can volatility spike, it's staying elevated. So, but here's what we did today. We actually sold a bear call spread out to Friday on VXX, because look at net what it's doing. So people are like, it actually got worse on Friday. I've never in my 27 years of doing this seen a bloody Friday like what happened from Powell in the morning to the broadside back and forth between the two countries. But look at what's interesting, guys, is what's becoming certain right now? The uncertainty. So I think we're going to stay elevated. We're kind of hanging above the 50-day on VXX, but it's getting lower. So what we're doing is literally you can have dueling trades on. Like last week we had bullish on volatility and bearish on volatility, and guess what? We took off the one that was making money that day, and then the next day when it got smashed, we took. So we've just been doing up down, bull put, bear call, and actually for Friday. We got filled today on an iron condor on VXX out to Friday, up about $400 right now, risking about $3,900 here to make $3,600. So volatility, I call this a football trade. Here's your uprights. This thing can go crazy as long as it doesn't step out of bounds here. So between now and Friday, we got about a $3 or $4 wide tunnel that the VIX can go through, and I'm pretty happy with that. So we're having a blast trading this volatility, but I like to remind my members, if you're going to put a question mark on the right side of this trade or on the right side of this chart, like, dude, I have no idea what's going to happen. Right. Just like the 1980s war game movie, sometimes the only winning move is not the trade. So no trade is a good trade right now if you're feeling a little frosty.
Hey, John, I was going to give you a bite at the apple here with NVIDIA, because I know you do follow a lot of the techs up there. And NVIDIA, we all know, has gone from 280, 300 area all the way down to 120, 160. And, I think they're still exposed to a blockchain. And if there is, currency confusion, because, the head guy from England did a dissertation on changing the unit of measure to some kind of a digital currency, so we don't have all these 900 currencies going around the country or the world. And so, could NVIDIA really be benefiting from the blockchain boom?
Not really. Also, what happened in England last week is that a judge seized $1 billion worth of Bitcoin from a hacker and ordered its liquidation. So it's still being stolen and it's still being forced liquidated.
Did you have an opinion on his little speech that he made at the G7?
Yeah, someday my view on cryptocurrencies is that it's still early days. When something finally does work, the government will take over the whole thing and just have dollars exist electronically.
Right.
Until then, there's about a 50% chance that all your Bitcoins will get stolen. As far as NVIDIA goes, there's a much stronger argument. And that's artificial intelligence and gaming, which continue to go gangbusters. On the next dip down to 150, we'd be looking to put on in the money call spreads in NVIDIA, and even 1 or 2 year leaps where you can get really big returns. Our 3-year view on this is that it goes to $500. And the same with Micron Technology, Advanced Micro Devices, and Lam Research. That whole sector is just going to absolutely rocket once we get to the other side of the next recession.
Right.
Yeah, real quick, folks, I do not trade cryptocurrency. Let me be absolutely clear. So Russia, China, North Korea, even Iran, ladies and gentlemen, everybody knows, and I think even Obama sent the Iranians a note, if you mess, because you guys know, we could wake up tomorrow and every account you have shows zeros in it, from your brokerage to your banking account.
I hope not.
Well, guess what? People's Liberation Army, Putin. So
it can happen. It could happen, but I certainly hope not.
Well, here's why it shouldn't. But here's what I'm getting at is every country has big boys or girls running it has been briefed that it would be considered a first strike. Obviously, if we woke up and everything's zeroed out, everybody's rioting and it's Planet of the Apes. That's the financial system. Bitcoin and all these cryptos are the wild, wild west. North Korea, what was it, a year and a half ago, 120 or whatever it was, $1 million in Bitcoin evaporated. It was North Korea, folks. I mean, North Korea, and we've talked about this with the electrical system and stuff like that. Remember a couple of years ago when Sony made a movie mocking the dear leader, what happened? Sony almost went out of business. They hacked in there, the North Koreans. And so we've all kind of looked at each other and said, we could care less about the cryptocurrency, steal all you want or make them zero. We don't care. But if you hit somebody's financial system. So folks, do not, there ain't no FDIC of Bitcoin. So do not trade anything. We could wake up and everything's zero. But again, like I said, that is literally a Pentagon. We warned you, that's a first strike. That would be considered a nuclear attack because it would be crazy. Cryptocurrency, nobody cares. So if you got a lot of money in crypto and you wake up and it's zero one day, that's your fault.
Right. There's no FDIC on that stuff.
Yeah, the movie you're talking about is the Interview.
Yeah, exactly.
Obviously, they do not have a sense of movie in North Korea. That's the Seth Rogen movie.
Yeah, they don't have a sense of humor.
Not only does it not have an FDIC, there also is no legal system.
Right.
Which means you can't sue anybody to recover your missing cryptocurrency. So crypto is really for kids who like to trade things that move.
or the mob, right? Or the mob.
The mob. Yeah.
And a lot of the net buying is from China, where people are trying to flee the yuan.
Right.
Correct.
Anywhere from 50 to 90% of the net buyers of crypto is Chinese, trying to get money out of the country.
Yep.
All right, well, we're at the top of the hour here, so we're going to wrap it up with a final reminder of who's been talking and how to get a hold of you. And if you have any special offers, this is a great time to shoot it out. So let's start out here with John and just review about yourself and any special offers you might have or how to get a hold of you.
Well, it's John Thomas. I'm at madhedgefundtrader.com. If you want to get some of our free research, go there and sign up. Just put in your email address. We're up 16% in August, 35% so far this year, and we're averaging 34% a year for the last 10 years. So if you want a 50-year veteran trading at your side, go to madhedgefundtrader.com.
All right, sounds great, John. And Whiz, again, a little background, not a background, but just yourself and how to get a hold of you.
Yeah, you bet. I do a free daily video market commentary. You can head to go.topgunoptions.com/sitrep. That stands for Situation Report. I'm a baby compared to John. He's doing it for 50. I'm working on. I'm a half that, 27. So he's the Jedi Master. I'm Luke. But good daily market commentary. It's free. You can just head to go.topgunoptions.com/sitrep. And like I said, we're having a blast trading this thing, man. This is a target rich. But to be honest with you, as an options trader, this is fantastic. In a market that's going, straight up or straight down, it's not easy to make money because why? There's no volatility. But this is, to be honest with you, thank God for Trump because of the gold tweets that he sends out. You might not like them or you might love them, but this is a gift, and you should be really taking advantage of this volatility here. And like I said, we're put on dueling volatility trades. One day it's getting hammered, and the bearish one's good, and then the bullish one's the next day, because this is the market for the next foreseeable future, at least until September 20th. When Jerome comes out. And then it sounds like the three of us agree when Uncle Jerome speaks, it might even be a sell on the news and get worse. So be very, very careful. Yeah, exactly. So, good working with you, John, and Jim again, and thanks for having me.
You bet. Always a pleasure. And I think today we went over a lot of stuff, and listeners should have been able to pick up a lot of good information. Not only that, make sure you wrote down how to get a hold of these guys, because we're going to be on a on a pretty bumpy road here, and it would be nice to have some information from these guys while you're trying to watch and figure out what you want to do next, because volatility, as Whiz was saying, it ain't going away tomorrow night, that's for sure. So again, yeah, thanks everybody for being here. I'm Jim Kenney. If you want to reach me, it's optionprofessor.com. And if you want to shoot me an email to find out what I'm looking at, what I'm focused at, just go optionprofessor@gmail.com. Okay, guys, great to be with you. And I'm turning it back over to David right now.
All right, thanks, guys. Great discussion. And just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast network to get access to future shows. Also, you can go to TimingResearch.com and you'll be able to find the archive for this show or any of the past shows there. And just want to thank my guests again for today's show. Matt Buckley of TopGunOptions.com, John Thomas of MadHedgeFundTrader.com, and Jim Kenney of OptionProfessor.com. Thanks, everyone.
Bye.
You bet. Have a good night. We'll see you.